This is Mortgage Minute with Scott Lief. Hi, I'm Scott Lief. Welcome to another edition of Mortgage Minute. I get asked all the time, I want to save money on a home. How do I do it? I want to get one of those short sales, foreclosures and all that. And you know what? I've learned by being in this business a while. Ain't so easy. So to answer that question, I've got the man who knows all about that, George Pangis from the Pangis Law Firm in Englewood and White Plains. George is the pro's pro when it comes to short sales and distressed property. So George, a couple of quick tips. I want to buy a short sale, a foreclosure, an REO property. What would you say to look out for?
Sure, Scott. Well, it also, of course, depends if you're the buyer or the seller, but in a short sale situation, what that means, of course, is that the sale price of the house won't cover all of the liens on the property. Mm-hmm. That means we're going to have to go through a bank and get bank approval for that sale. We can't just contract and sell it. If you are the buyer, you need to understand that bank approval takes time. So you cannot be a 30-day in and out closing like you could with a conventional loan. What you're going to need to do is plan accordingly with the closing time frame. If you're the seller and you happen to be in a foreclosure, which many short sales are, then you have to understand that federal regulation requires the bank to process a loan modification. Even if you don't accept the loan modification, they have to put you through the process and explain your options before they will even evaluate the short sale. So the seller has to understand that they will be involved in the process. They don't just get to hand it off, and the buyer has to understand it may take more time.
So I just picked up two things. One, you need an attorney who's experienced in this venue. And two, no matter what, it's going to take more time than you allow.
It's certainly going to take more time than you would want ideally. So yes, you have to be patient, and the attorney being the right attorney will help.
Okay, and what would you say one more big stumbling block you see from people buying these distressed properties should look out for?
Well, an REO property is a property that's owned by a bank or municipality that they've acquired through foreclosure.
Real estate owned.
Real
REO.
estate owned is
Gotcha.
the acronym, correct. And what is important to know is those are always as-is property, which doesn't just mean the condition of the property, it also means who or if anyone is in the property. So a bank who acquires the property isn't necessarily evicting the former occupant or tenant who's on the property. And if you're buying that property as is, you have to understand that it's going to be incumbent upon you to remove them if you want to move in.
That sounds like it could be a headache with a white picket fence.
It could be a very big headache, especially if you have the wrong attorney who doesn't do the prep work before you close.
Awesome. George Pangis, Pangis Law Firm on Mortgage Minute. I'm Scott Lief. We will see you next time. Thank you. You've been watching Mortgage Minute with Scott Lief.